Yeah, let's get into another training, y'all. So we get participate and be a part of the most important market. There are several markets out there we can get into, but the one that's really, the most important one to me is the futures market. These these products that we use and consume every day, we can actually participate in a market where we can actually make a profit from the price movement, and that just makes me all bubbly. So let's talk about this old market called the futures market. So before we do that, we always like to make sure we go over to Barbara. And on our platform, we make sure we stay compliant. So we know right that you have to inform everybody about the market that we're talking about. So over to you, Barbara.
Yes, sir. So here's our disclaimer for Futures and Commodities One-on-One Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
All right, Barbara. I'm not sure if your mic can turn up a little bit, but the volume's low. So if it can,
Okay, how about now? Is
yeah,
that
you
better?
sound better.
Okay. My apologies, I didn't realize.
No
Um,
problem. The good thing is, as long as we have a disclaimer on the screen, and then you do the pleasure of reading it, but you don't even have to. But what the regulators want for you to have a disclaimer. So I appreciate the fact that you read our disclaimer.
okay. You're very welcome.
All right, so we won't worry about the quizzes. They don't care about the quiz. About we just go on to the next lesson. Unless y'all want to go over the
No, we
quiz.
want to go over the quiz too.
Oh, you do. All right, let's go over the
Yes.
quiz.
I need to know if it's downtrend or sideways.
Okay.
Let's go. Let's go over these quizzes then.
Okay. The first quiz. When a top formation forms on the chart, this indicates that the market could be changing direction to go into what type of trend? Anybody know the answer? When a top formation forms on the chart, this indicates that the market could be changing directions to go in what type of trend?
I'm gonna say
Come
downtrend. I
on,
don't
what's going
remember.
on, y'all?
Downtrend.
I'm thinking downtrend.
I heard somebody. I heard Steven and somebody else. Was that Pam?
Yes.
And I seen somebody in the chat.
Kanisha said
So
down.
Tanisha said down. Pam, what did you say? I heard you say something.
I said down also.
I think that's what Steven said. So y'all saying that top formation means that the market possibly getting ready to change direction and go into a downtrend.
Right.
Anybody feel different? I always play it in your head. If you need to look at a chart, do that. But there's no what you should do in your head is think about what trend was the market in before it started making a top formation. So it was in an uptrend,
Uptrend.
and then it started to form a top formation and change direction, maybe to go into a downtrend, and that's why that answer is correct. Very good.
All right. So, next question. Sugar made a top formation. Did the market confirm the top formation? See the chart. Sugar made a top formation. Did the
Did
market
you say sugar?
confirm?
Oh Lord, not sugar.
I know that's right. Confirm a top formation.
It confirmed.
Yes.
Say Pam and Steven said yes. Anybody say different? So the answer is correct. But who can tell me how does the market confirm? How do we get that confirmation?
Let me read this question again. Show me a top formation of the market confirmed. So at the bottom, as it was going down, there's a two and then um, a higher three,
Mm-hmm.
and it surpassed I know my verbiage isn't correct, but it surpassed the two. So um, that's how we know it confirmed.
They passed a higher two.
So sounds like to me, listen to what you said, Pam. Said the market traded down to support, which was the number two.
Personally like that.
Right, right,
And then the market traded back up
right.
from the number two
I don't want
and
to
hit
answer.
resistance, which was the number three.
Yes, sir.
So after forming the number three, the market traded down towards the number two to test that number two, and it actually traded through it. Is that what you're saying?
That's what I'm saying. You sound so much better. I'm going to get there.
That's okay. That's what you were implying, right?
That is exactly what I was trying to say.
And that's exactly how we get the confirmation. Very good. Very good. Is everybody clear on that?
I'm not clear, but as a disclaimer, this is my first time joining, so I have no idea.
Well, we appreciate having you on the call, Kenesha. Just know that the three formations that we watch for on the chart, and this this quiz is covering how does that top formation confirm that we do have indeed have a top formation, and this is how it's confirmed. The market tests out. It goes back to retest our support level, which is the number 2 point. And when it tests that number two, the number two, that support level can hold. It doesn't always trade through it. And we like to wait and see the market trade through that number two before we enter the market. So our order to get in will be below the number two. This would be an order to go short sugar. So we will be waiting for the market to test that number two support, trade through it, and our order will be waiting to get filled just below that number two. That's how that works.
Okay. I'll be sitting back taking notes.
Okay. Glad to have you. So
Thank you.
I said in the beginning, we ain't got to go over the quizzes, Barbara, because they don't want to go over the quizzes. And I said that because I had a bonus question this week.
And they want to go over that bonus question.
Yes, sir.
I'm gonna tell you that. That's what they want to know.
Yeah, and
It's an
I
interesting
had
question.
yeah, I had a little conversation. Me and Alex was talking on our advance call today, and I said, Alex, I don't know, man. My feeling was feeling well some kind of way because I made this bonus, this question, and I said, man, is my money funny? Or they just don't like my prizes? What is it? I posted a bonus question trying to give away prizes, Barbara, and only a couple people even answered the bonus question.
I know.
I said,
Your
man,
money not funny, it's real. It's for
They
real,
don't want
y'all.
no money. What's going on? They ain't even trying.
Yeah.
So what was that bonus question, Barbara? Let's get into it because I don't know. My I couldn't control my emotion on this question.
It says only one win per quarter for the bonus question, everyone. Special prize to the person who is first with the correct answer. What is my favorite formation to trade and why?
Mm. Not just what is it, but why is it?
Why is it?
Well, I had no clue, hence my non-answer.
And I
You don't,
had a
Polly?
clue.
Miss Paula didn't know?
I had a
What?
No,
clue.
I couldn't remember.
Oh no.
I got confused in remembering. I said sideways, and then I thought, no, I think it's downtrend. People jump out of the market and get afraid, and I think that's Devin likes to go in and make his money then. That's why I said that. But then when John came in and said sideways, I said, I thought that first.
So let me ask y'all this. Let's
So
get this
Del,
part clear
hold on.
first. Let's get this
So
clear
Del,
first. How many formations do we watch for on the chart, Steve?
You know, just
Three,
stress.
3
three,
Who can tell
up,
me the three
down,
formations?
up, down, and
upward,
sideways.
up, down, and sideways. Your favorite is sideways
A top formation, a bottom formation, and
and
a
a
sideways
sideways.
channel, right?
Right.
Yeah.
So the reason I ask y'all this is the two reasons. Every time we talk about formation, when we get to the one that's my favorite, I always make sure I mention that this one is my favorite of the three. And then I tell you why it's my favorite. So what is the correct answer? Can somebody tell me?
You watch it to
Sideways.
see, you watch it sideways to see which way it's going to go because it's going to break out on a top formation or a lower from or a downwards formation. Either way, you're going to win. You're going to make some money either direction it goes. Either direction, no matter what.
Spot on. He's spot on.
What's the answer, Barbara?
Spot on. He answered. I ain't gotta say that. He answered it very correctly.
God, everybody, all y'all should know this. The sideways channel is my favorite formation of all the three. The sideways channel. Now, I actually end up trading the top formation being short the market more than any of them because it just works out that way. But if the channel formed on the chart more, I would be in more channel trades. But the sideways channel, which the new school calls consolidation, that's my favorite trade, formation to trade. So very good, very good. Unfortunately, nobody got the question right in the group. I think Pam came in with an answer, and Miss Sutherland, how do I say your name? I'm always using your
Kai.
last name. Is it
Kai.
Kai?
It's Kai. Mm-hmm.
Okay. I think they answered it in the group, but nobody got it right until John came in the room. But John wasn't able to get win the prize because he already won one within the last quarter in this quarter. So I think we're gonna have to do this again.
Got one more
What y'all
week.
think?
We got one more week.
Do it again.
John
More week,
John
y'all.
got the right answer. He got the right answer, but he wasn't supposed to win.
Yeah.
Y'all
Do it
coming
again.
strong. Come on in.
John, I didn't even try for that reason.
Yeah, Alex, you can't win either. Very good though. Very good though. I was feeling like, okay, I know y'all know the answer, but the thing was, it was something I always mention when we go over that formation. So I thought everybody would be flying in the room to answer it, and it turned out it was the opposite. So let's jump into the training, Barbara. What happens to be our lesson today?
Okay, let me share screens. Today, we are lesson 11. We're still in the formations on the sideways channel. Delvin's favorite of the three. We're going to talk about some gaps briefly and some paper trading with risk management. This lesson can be found in lessons 7 and 9 in the Manual of Futures and Commodities 1-on-1.
Oh man. I would love just to recap and just get some feedback, get some testimonies, feedback of how the experience of the first Travel and Trade Workshop Retreat went, and just to check the pulse. Let's get the energy from the event, man, and start the call that way. All right with you?
Yes, sir. Absolutely. Thank you for letting me be part of the decision making.
Absolutely, man.
It's like speechless, and it really woke my wife up as well. Both of us coming out here. So this is, to me, in reference to everyone, sitting on a call every Sunday night is no comparison to actually being live and to be right beside Delvin, and you can ask him Q&A questions, and he can actually answer them, and you can take those notes, and he can assist you. So to me, I would say to everyone, it's a life-changing event, and I know in my heart I'm going back for the next 30 days doing paper trading, and then we are going live, my wife and I, to start doing this, because it was just an eye-opener to see it. And as well, Johnny, when you came on the call, you had some good examples in reference to explaining how you told us. So again, it's speechless, and I thank Delvin so much for putting this together. So it's a life-changing event for my wife and I. So we are excited, and we are looking forward to the next event. We will be testimonies.
Can I say something? I don't believe in commodities before I came. I listen John every Sunday, and I was in the room in the kitchen, but I was listening and say, oh my God, this is too difficult for me because I don't understand nothing. Maybe that's the same mentality that a lot of people has because they don't learn the skill set. But something happened yesterday. My first time listening, delving with my 1,000 attention, and I love it now. I say, John, we go ahead. Now we can go ahead. Look how much information I can get in only one day.
Man, I think I talk too much.
Those are the formations in detail.
Wow.
I love it now.
Can you pause right here for a minute? Oh my goodness. And Rosa, you can't. I'm sorry, Bob. I don't mean to stop your video. I just want to say something. Does everybody know, understand that you can come to this retreat that's coming up here at the end of April, beginning of May, for probably $100 and something with that Frontier Go Wild pass that I've been talking about. You buy that pass for $99 and then purchase your flight, paying only the tax is $15, and you in Arizona. Is everybody clear about that? I want to make sure because if you understand what's going to go on at this retreat, you want to be in that house. You want to be in the house, I'm telling you. So Barbara, Um, I got a small request, if you don't mind. I don't know. Can you tell me how how much trouble is it for you to play that video from the tricks and trades? Over the going up before we get into Sideways Channel
Oh, not
for
hard
the
at all. Not hard at all. Just a sec. I got it.
formation.
I got it right on hand.
We didn't get into that video, and I just want to say before Papa plays it, on this video they're gonna go into the top and bottom formation, 1, 2, 3, that we've been learning and going over, and over time, this the way that my mentor and his mentor traded it, that's been being traded for probably a couple hundred years, and probably even longer than that. But the formation still works today, as you can see. But there have been some people who made a little few modifications to how they trade the 1, 2, 3. And I did the same thing. So I don't trade exactly the same way my mentor taught me the 1, 2, 3. But I just want y'all to know before we get into this video, there's a little slight difference on how they trade this 1, 2, 3 versus how we do, but it's still same concept. So if we can watch this little short video and really pay close attention. Thank you, Barbara.
Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. This week I want to talk to you about the ever humble but super powerful 1, 2, 3 formation. This is such a basic support and resistance formation that we have a tendency to overlook it. But it is one of the most reliable signals and one of the most powerful reversal signals. And I'm going to show you in a minute how you can use it as a continuation signal out there. All right. So what is a 1, 2, 3 formation? 1, 2, 3 formations were made popular by Ken Roberts. He traded the 1, 2, 3 formation and the channel formation. That was pretty much the whole essence of his course. But he was very strict with his 1, 2, 3 formation. I'm going to show you a little modification on the 1, 2, 3. But essentially, the 1, 2, 3 is when the market makes a new low, that's the number 1 point, goes up, makes a new point of resistance, that's the number 2 point, and then the number 3 point occurs when the market comes back down and challenges the support on the number 1 point. Now that would be what is called a 1, 2, 3 bottom formation. And let me just play this forward a little bit so that you can see what the 3 point's going to look like. All right. Here we have the 1 point, which is our low. Here we have our 2 point, which is our high. And then here we have our 3 point, which is new support. And remember, support is our red-green bar combination. It came back down here. It did not exceed the 1 point, and therefore we have a 1, 2, 3 formation. The way the 1, 2, 3 formation is traded, I'm just trying to get rid of the lines here so that you can see it a little better. Maybe I can't do that. Okay. The way the 1, 2, 3 formation is traded is that the signal confirms when the market trades above the number 2 point. Now, us support and resistance traders know that we can get in a little bit earlier, especially if this number 3 point showing support has a reasonable sized bar attached to it. This particular instance, the size of the bar forming the number 3 point and the entry above the number 2 point, pretty much the same. So the way it works is we would use our number 2 point as our entry, and in this instance we would go long if the market breaks the number 2 point. And you can see a few days later it did, and we would be long this market. Traditionally, the exit stops go all the way back down here below the support point. Now that would depend a little bit on your own current situation. Obviously, the further back you can leave the stops, the better for your trade, because it will enable you to ride out some market swings. But I have been known to leave stops as close as a day or two behind a trailing stop. We're just going to play this forward. And you can see that in this particular instance, we got a pretty nice little run out of it. Now, what I want to show you, and I don't know why that line is there, but we'll get rid of that. What I want to show you is that you can also use this as a continuation pattern. So let's say, for instance, you didn't see the original 1, 2, 3. Now, the pattern is going to repeat itself so long as it is forming. In this instance, we're in an uptrend, so we're looking for it to form higher resistance and higher support. Remember, that's our basic definition of an uptrend from a support and resistance viewpoint. So long as the market continues to form higher resistance and higher support, we will continue to look for opportunities to buy. All right, so here we have an instance now where the market has essentially made another 1, 2, 3 formation, but this time the number 1 point is down here. We have our number 2 point, and we're going to be on the lookout for our number 3. So let's play this forward. Let's see where the number 3 comes in. Aha. Okay, that's looking a little bit like support. So now we have our 1, 2, 3 formation repeating itself. And what we can do, I'm going to make there, that'll be easier to see. What we can do is we have new support here. If you're going to be more aggressive on this trade, you can enter above the support. So in this particular instance, you would enter above here, being the high of this bar, and we could cover the trade below the number 3 point. Now, this should be familiar to most of you because I do this a lot. I wait for the market to give us new resistance, come back down, show us support, and then I'll put in a buy order. Now, if you're following a secondary indicator like momentum or RSI or something, then you'll be looking for it to confirm that we have indeed a shift in momentum, and that will help make it a little bit easier to buy or will increase the probability of your trade. But even without that, this is a very valid buy signal. You can also trade the 1, 2, 3 again in the traditional format and not buy until the market trades above the number 2 point. That's entirely up to you. Entering above the number 2 point makes for a stronger signal in most cases. But of course, you also have the opportunity to profit, sometimes considerably, between the support formed by the number 3 point and the resistance by the number 2 point. Okay, well, our number 3 point is still holding, and right now it looks like we could make this trade even a little bit tighter here. We have, if I back this up one day, we have new support here, right, with our red-green bar combination. Okay, now we are, hold on. Okay, I made us sweat for a few days, but it looks like it finally let us in. It's laboring. Oh my goodness. Come on. There we go, finally. Okay, I'm just playing this forward. Now, here we would have actually crossed our number 2 point. So you could have entered long here as well. But what I want you to see is that the pattern is going to repeat itself yet again. So you had actually multiple instances where you could have reused the 1, 2, 3. You could have reused it here. You could have gone 1, 2, 3. You could have gone like this. 1, 2, 3. And if you were really sharp, you probably could have caught this one too, 1, 2, 3. So you can see that not only is it a reversal pattern, but it also gives you an opportunity to enter a trade that is already trending. And once again, we have, at the moment, we have our 1 point down here. Looks like we have a possible 2 point. Yes, we definitely have a 2 point. So we have our 1, our 2, and now we're going to be on the lookout for our 3. Something happened here. Did you catch this, what just happened? Remember what the definition of our uptrend was? We have to see the market make higher resistance and higher support. But look at what happened here. All of a sudden, the market has broken through our old support area. So now we might actually be looking at a reversal of our 1, 2, 3 bottom formation, and we might be seeing the opposite happen, a 1, 2, 3 topping formation, where the market makes a new high or a high, comes back down, makes new support, and now we're going to look for it to challenge this high, the number one high, and then fail. And sometimes you have to be really on the ball. Okay, now that looks like it's a 1, 2, 3 formation. This is a 1, 2, 3 formation, but it will not confirm a 1, 2, 3 until it has technically broken the number 2 point. Once again, you do have resistance here with our green-red bar combination, and you could look to sell below the number 3 point, but the safer trade is to wait for the market to actually to confirm. Okay, so far so good. Oh, it's struggling. Okay, and in this particular instance, if you had sold here the number 3 point, we would have been stopped out. Now, one thing I want to bring to your attention as well is even if you see a 1, 2, 3 formation like this, and you caught it the wrong way, another signal is to sell or buy the break of the number 1 point. And why would that be? Well, that's because the number 1 point is a very significant area of support or resistance. So in this particular instance here, if we had seen the 1, 2, 3 like this, you could have bought the market as it broke through the number 1 point. If back here you had seen a breakout here below the number 1 point, you could have sold here, even though it was relatively short-lived. It isn't always. Many years ago, when gold was falling instead of reaching new record highs, I saw a 1, 2, 3 formation in gold almost every month or so, and I kept looking for an opportunity to buy, only to see gold prices continue lower and lower and lower. Don't ask me why, but it took me a long time to figure out that I could actually sell a failure of the number 1 point, and I made a lot of money doing that when the market gave me a 1, 2, 3 setup and never completed, but actually went in the opposite direction. So those are the 3 things you can do with a 1, 2, 3 formation. You can look for the 1, 2, 3 tops and bottoms. You can look for the intermediate 1, 2, 3s as an opportunity to trade the market with the trend. And you can buy or sell a failure of the number 1 point as that, and that's a valid signal as well. So keep an eye on those 1, 2, 3s. They're very powerful, very simple, and very profitable. And that's this week's Tricks of the Trade.
Thank you, Barbara. Thank you. Anything you want to add or say, Johnny, man, before we get into the lesson? And
No.
is everybody clear about these formations, the bottom, top, and bottom, before we move on? Go ahead, Johnny.
No, I'm okay.
I had a quick question.
Okay.
When trading the formation, so do you only trade once it breaks that the number 2 position?
I
yeah,
do.
number 2.
I do. I wait for that confirmation. Just like he mentioned in the video, it's a safer trade to wait for the confirmation. But can you enter the market before that and be more aggressive? If you want to, you can. But it's a safer trade to wait for the market to confirm. So yeah, I
Okay.
definitely wait for that confirmation to let me know that the resistance or the support did not hold, and the market traded through it, and the trend is actually changing direction.
Gotcha. Okay, I think you answered my question perfectly. I was trying to get my thoughts out there, but yeah. Thank you.
Oh, okay. You're welcome. Anybody else got any more questions about top or bottom? We gonna move on. All right. Go ahead, Barbara. What we got?
All
Where you
right.
find this at?
Futures and Commodities 101 book. You guys, if we want you to get this book, the mentors every Sunday, this is what they teach from. The course that's been put together is all comprised in this one book. And we would appreciate if you would purchase it. Those that have, we continuously say thank you. We are so appreciative. And if you wondering, well, do I need the book? I come on the call every Sunday. I would tell you do need the book, because just coming on the call alone is not going to be enough for you to really learn this market. This is a big market with a lot of different commodity groupings, a lot of different information. And we want you to do the best and have the best start in building your business. And it's done through knowledge, understanding, and wisdom that Delvin has received over 30 some years. So that's in this book, what he's learned, what he learned from his mentor. So we would appreciate it if you get it and leave us a review. It really helps with the sales if you were to do that. So thank you so much. All right, so next we need to give special thanks before we move forward to the CME Group, which is the largest exchange worldwide. We get a lot of education and videos from them to use to help you guys learn the marketplace. Also, barchart.com, we know that's our go-to platform. We recommend, if you don't have a free barchart.com account, please log on to barchart.com. It takes only about a minute and a half to sign up for a free account. They also have paid accounts too. You do have the option of getting a paid account if you like to, but they also have free. I will tell you, Delvin's never had a paid account, and he's been using them for a really long time, but they do offer paid account too if you would like that. So you do have that option. All right, Mr. Johnny, it's over to you.
Okay. So we talk about the three different formations we're looking for. The two that we know the easy or the most is the top formation, the bottom formation. But oftentimes the market doesn't just change direction, it goes flat. It goes through a period of what they call consolidation, where neither the buyers nor the sellers take control. Prices move within a defined range with no clear trend. Traders watch for a breakout near support and resistance levels, and the volumes often decrease. All right. Now, how do we trade a sideways channel? I want to say something here, and Delvin, you can either agree or disagree. If you disagree, let me know. Sideways channels often appear at after a 50% retracement, and also on a 1, 2, 3 bottom, probably more than they form at a 1, 2, 3 top. Would you agree with that?
Absolutely. Most definitely agree with that, John.
So, if you listen to that video we just listened to, we place a buy limit order above the top of the channel. So what would that be? That would be a number 2, wouldn't it? Okay. So, and then below the number 3, we would place a sell limit order. If you'll notice right in the middle of the chart, there's a sideways channel. Okay. So if you had seen the bottom and put a 1 there and then gone up to the number 2, all right, well, you can't do it here, but we're just, you'll see a number 2, a number 3, another number 2. Okay. And if you'd have placed a buy order above the number 2 and a sell order between the number 3, which one would have filled? So when a price is triggered and filled, the other price becomes your stop loss. Okay. Next chart or next slide. Okay. People trade sideways channels and futures because they often repeat, or they're often repeatable, low risk opportunities, even without a clear trend. Here's why traders are drawn to them. A consistent range means it's going to trade right between that range. Market tends to bounce between the support and resistance, creating a predictable entry and exit point. Clear risk management. A tight stop loss can be placed just outside the channel boundaries. Breakout potential. Traders position early for strong moves when the price finally breaks out. Lower volatility periods can be easily managed, or can be easier to manage trade compared to high volatile trading markets or trending markets. In short, sideways markets give traders structure, clarity, multiple chances to profit, even when the market isn't trending. Another slide. Let's go back. I need to find a good, I would like to go to to bar charts and find a good
Hey, Johnny, before we
sideways
do that,
channel for a second.
can I touch on something, Johnny, before we do that?
Sure.
if we go back to that chart, Barbara, that first chart you had with the channel, then we talk about the sideways channel being my favorite formation to trade. And and I always like to talk about and point out, why it's my favorite. My favorite to trade is the channel. And it's my favorite to trade because it's the easiest to trade out of the three. The market is so much lesser on the volatility. If you see the bars or the candles on the chart, see that the bars and the candles are not real long. That means the market is quiet. It's not as volatile. When you see long candles and long bars, that means high volatility. So when the market trades sideways in the channel, it's not as volatile and it's easier to trade when it's not so much mess, so much noise going on in the market. So I like the channel the most because of the lower volatility. And like Johnny says all the time, you know, nobody can pick the top or the bottom. Nobody can predict the market. So when we trade with a top and a bottom formation, it's a little more harder to trade than the sideways channel. We looking for the market to change direction when we see a top and a bottom, but when we have a sideways, here's the thing about it. We can be in position to catch that market when it breaks out, no matter which direction it breaks out, to the upside or to the downside. We can be in position to get in the trade. And the most important part is it doesn't matter which way it breaks out, whether it breaks out to the upside or to the downside. But the fact that the market has calmed down with the volatility, it makes it a lot easier to trade. And that's why it's my favorite. Thank you, Johnny.
All right, can we go to, I guess let's go to the corn chart.
You can always catch a channel sometime on that Fed fund or the SOFR too, Johnny.
Yeah. And go December and go a 1-year chart. Okay. Do you see the middle of this chart? Can you draw trend lines on that? Okay. When we talked, when we went over the information, there's basically two ways to trade this market. So this went from November the 17th through January the 12th. Okay. So November, December, and January for 2 months, right? From November the 17th, almost 3 months, right? November, December, or yeah, 2 months. This ran flat. So if I wanted to trade corn and I saw this trend, right? Then I know it's trading within boundaries. Support is the lower level. Okay, so that's what is that, about 470 to 457, right? So um, that's 13 points, correct? 13 points equals what? Or, excuse me, that's not 13. How many points would that be?
Looks like about 23.
450 to 457
From 457,
to 470.
right,
It's 13 points.
13 points. 13 points times $50 is how much?
$650.
$650. So I can, if I see this extension, there's two ways to trade it. I can buy at the low and sell at the high, right? Sell at the high, buy at the low. And keep doing that as long as this keeps going. That's a tight trading range. However, we would also what makes this an easy trade is if I put a buy order in above that level and a sell order below that level, the bottom line. What ended up happening? Which one filled?
The sell.
The sell.
The sell.
And it immediately dropped to 445. Right? How many points was that? 447, or what was that? 457?
To 445 is 12 points.
12 points. How much profit would I be in?
The 50 is at 50 a point?
600.
600, yeah.
Exactly. All right. Now it's going to, now on this chart, it does reverse. So where do I want my stop loss? Guess what? What does that little cup tell you?
The lowest point?
Exactly.
Right down here. So when
That'd be a number one, wouldn't it?
Yeah.
Right.
Yeah, so one.
Do I got a number two for him?
Yes.
It come down to that lower level. The next. Okay. So actually what I would be doing is as soon as it reversed, guess what? I better come out of that trade. Um, excuse me. Let me get a. Can you move that first number two to right here? All right. And that, There we go. And you can actually move that next 2 down. And the next 3, and then another 3. But anyway, so if you'll notice, unfortunately on this, if our um, when this thing first made, we often say that that top line, the top red line, would be our stop loss, right? So that the top red line, when we entered the trade, the very top, that's where we entered. All right. So that top red line would be our stop loss. But as soon as it dropped, as far as it did, where would we move our stop loss? Exactly.
Right above the 3.
It came back up and made a number 2, right? And then confirmed.
Mm-hmm.
As soon as it can, we better have moved our stop loss. As soon as we made 12 points going down, we should have moved our stop loss down 10 points, which would have been that next red line, the middle red line. Okay. But anyway, what it says on the when you're dealing with a sideways channel, you want to tighten your stop loss, right? So there's 2 ways to trade it. One is just the trend up and down. And matter of fact, Barbara talked about trading trend lines, even when it's up, down, or down, up trend or downtrend. You still got a trend line, which is support and resistance, correct? So you're trading those two lines, support and resistance. But you're also waiting for a breakout. And the breakout is where you're going to make your big money. I hope I didn't confuse people, but in the information that we provide, there's 2 ways to trade a sideways channel. All right.
That was very important.
But Mr. Johnny, we're looking right at the breakout as it's happening, because the upward channel is going higher, making higher highs and lower lows as we're looking at it.
On this one, well, can you erase those? No, I'm sorry. Say that again. Was that Steve?
Yeah, can you hear me?
Yes, sir.
I was saying that during the breakout, it dropped down and then it made its upward trend going high. So it's showing us higher highs and higher lows as we're looking at it, just by breaking out from the sideways channel. Am I correct? Or if I'm not correct, please, by all means, show me.
Okay, so 3 things happened here on this chart. We were in a sideways trough. It broke out to the downside.
Yes.
Okay. However, it also formed a 1, 2, 3 bottom. That's right after it broke out. Correct?
Yes.
And what happens when a 1, 2, 3 bottom forms?
I'm looking for the confirmation because it's got to go through the number 2.
And it did.
Mm-hmm.
Okay. So when it breaks, we just went over this in the quizzes. When it breaks
Yes.
out of a 1, 2, 3 bottom, it'll start an uptrend. So you're absolutely correct.
Okay.
It broke out to the downside. But once it broke down, then it hit a new bottom and started an upward trend.
Cool.
That's why, folks, this is why we have stop losses. Because you could have been fooled out of this real quick. Right?
Yes, absolutely.
Okay. So we know it broke out to the downside. Okay. Now it went into an uptrend. Okay. Then see, this market is there's a lot of forces going on behind here. But it went right back up. Now this is a 1-year chart. So it went all the way back up, formed a new high, did a 1, 2, 3 top, consolidate, went down, did a 50% retracement, and look what it looks like it's doing.
About to do another sideways channel at the end.
Correct.
Yes,
Now,
it is.
so what are we going to do here? How are we going to trade it? So help me out here, Delvin. Okay, give me a number 1, or excuse me. Give me a number 2. Okay, now this is it confirmed. We know because it passed the number 2, and we're in the trade again, long. And we're going to ride this until it gets to the number 1. Give me a new number 1. Okay. Ooh, it fell out. Give me another number 2. And a number 3. Okay. Now, did it confirm? Did the one, two,
For a top formation, yes, 1, 2, 3. It did a 1, 2, 3. Then it started its way back down.
okay.
Didn't go above the number 1, so it did a confirmation.
So can you kind of let's start our number 2s and 3s going down. Give me the last one. There you go. All right. Now, so folks, see, I've always said it's easy to trade this thing after the fact. But guess what? Now we're at a new, we can't see the rest of the chart because it hadn't happened. Right? So if we were going to try to play this, now we're moving down, right? So if the number 2, right, the last number 2 is our new entry point on the downside. So if this thing goes sideways, right, we can place 2 orders right here. At the number 2, or just below the number 2, what kind of order would we place?
Sell limit.
A sell limit order. Okay. What would we place it above the number 3?
Is that a buy limit?
A buy limit order. Okay. Now, no matter which way this breaks out, we're covered. If it's a sideways trough, we won't get filled on either side until it decides to break out. Correct, Delvin?
Yes, sir. That's it. Anything else you want to cover on this chart, Johnny?
No, sir. I've probably confused everybody already.
No, you did not. I'm being honest with you. You did not.
You revealed several strategies and way to profit. You gave us sideways channel 2 different ways and a bottom formation. So really somebody could have traded it sideways, turned around, got right back in, traded there, waited for this, and then set up for a sideways. That's double contract.
That's exactly what I see. That's exactly what I see.
You went through several ways to profit on one chart. That's all right, Mr. Johnny.
I'm sitting there saying I like it just like Mrs. Delvin.
Hey, man. This is how we learn.
Yeah.
So, and let me ask everybody a question because I know we've already went over our time, and Barbara had a couple other things to go over. Are you guys okay with going on a little longer, or you would like to stop right here?
Look here, this is why we here.
Hey, continue.
I'm sorry about going long. We still got the gaps to cover.
This was very educational. I mean,
absolutely, Johnny.
It's always a good thing to take one
breakdown,
market
Johnny. Good breakdown.
Ways. It's always a plus when you can take one market and just find several ways on the same chart to profit off of. You ain't got to go to another market. That's a plus. You can only do this in futures and commodities.
Before we go to the gap, before we get back to the slide, real quick, just to lay eyes on a different chart real quick. Can you go to the financials for the 30-day Fed Fund chart? Just to lay eyes on another chart real quick. So when you're looking at charts and looking for these formations, the easiest one to spot, in my opinion, is the sideways channel. That's the easiest one that jumps out to you when you're looking at the chart out of the three formations. Does everybody see a sideways channel on this chart right now that we're currently in?
Yep.
Is
Yes.
that
Yes.
does that jump right out at you as soon as you see the chart?
Yeah.
Yes, it does.
Yes, it does.
Remember I talked about the length of the candles, the length of the bars when we in the
Yes.
channel?
Yes.
That means the market is not as
Not
volatile
as
as it,
volatile.
right? When you see those smaller candles, smaller bars, there's less volatility. The market's a lot quieter at that time. And for some, they just look at that and move right on to another chart. But for me, I get excited when I see that because what I know is that market is going to break out of that channel at some point, and I'm gonna be at home when they do it. But here's the thing about the sideways channel that you need to know too. In most cases, when the market trades in the sideways channel, when it breaks out of the channel, it tends to do what, Barbara?
It tends to trade in that direction for about the same length of time it was in the sideways channel.
Exactly. A lot of that time that when it comes out of that trend, that breakout of that channel, a lot of time it'll mimic that same time frame that it traded in the channel. So another reason why I get excited when I see a channel. So if you look at this channel right here, it's a very narrow sideways channel, as my mentor used to call it. Narrow sideways channel. It looks like it's snaking across the chart. But at some point it's gonna break out like the one Johnny just showed you when we broke out of that chart. Barbara, what does the 5 year chart look like? I didn't look at that one. What do we have here, Barbara? If we trade in a sideways channel in the middle of that chart, and then we broke out of the channel to the upside, hope everybody see that, and then went back into another channel. Multiple channels on the same chart, and when they broke out, you could have got filled on that order and got in that trade, and then possibly caught another sideways channel and caught that breakout. So I know we had more good to go into, Bob. I just want to lay eyes on one more chart for the channel, and when you see, if somebody have a question in the chat, if they see a question.
Oh, no, I was just making a statement about what you said about it tends to mimic the trend, the trend that it was in, the length of time for the sideways when it breaks out. On that corn chart, I noticed there was a big bar when it broke out to the downside on that.
Mm-hmm. Exactly. And it happens a lot. When it breaks out of the channel, it almost mirrors what time frame it was in the channel. So not all the time, but most of the time it does. Appreciate that, Barbara. This been a real good training. Johnny P put on the clinic tonight, boy. I tell you. Let's let's get back into what you had left on the slide, Barbara. I appreciate y'all staying on longer tonight too.
Sorry, can I just ask a quick question? Barbara, can you just go back to that sideways channel chart that you marked up? I just want to take a screenshot, if you don't mind, please. The one that Johnny
The 6 month or
explained.
5 year. Oh, the corn
The
chart.
6 month.
Corn.
Yeah, the corn chart, sorry. That was marked up really nicely.
Absolute clinic, Johnny.
Thank you, sir.
Absolutely, man. What you've seen tonight, guys, that's how you break down a chart. That's what you call breaking down a chart. When you get to a point where you can do that, which you will, you'll understand that. That's what we mean when we say these charts speak to you. And as Johnny broke that chart down, you got to see what we're talking about. Is this what you meant, B?
Yeah, exactly this. Yeah. This is a good chart to sort of just keep looking at and trying to understand the 2s and the 3s.
Yes. If you want a screenshot this, go ahead and make the screenshot. We'll get into whatever Barbara had left for us. And y'all have to stop. Y'all have to stop us. Me and Johnny can talk about this all night. We have y'all sleeping when it comes time to get up tomorrow.
Whatever's left.
Hey, Delvin, I just want to ask, you may know off the top of your head, what's the point value? What's the point value for the Fed? Is that really expensive?
It's based on the interest rate, on the basis points.
Okay.
So it's
4,000 and something.
Oh, the deposit, the margin. Okay.
Yeah.
Yeah.
Not the margin, and hold on, the point value is.
Yeah, you got another market that's on the interest rate too. That's the SOFR. I think that one is $25 a point, or $2,500 a point. One of them.
Oh yeah, the point value is 4,000 and something. It's 41.67.
Okay.
You notice the size of that contract, though, John?
What's that you say?
You notice the size of that contract?
I think it said, was it 5,000 or 500? It was large, whatever. Let me see what 500,000.
No, keep looking.
5 million.
Oh yeah, that's 5 million. Yeah, 6 zeros. Oh my goodness. Wow. Nah, the thing is, I'm excited. I like the sideways channel. Woo. But
yeah, that's what you call leverage on steroids, right there, John. When you get a chance to control that kind of. What you say, Stephen?
I like the sideways channel.
Oh yeah, sideways channel. They all fun, but that sideways channel just makes me all bubbly inside. But yeah, man, imagine having, very little money used to control $5 million. What's the margin on this account? On this on this one,
between $247 and $225.
$247, and you're controlling $5 million. That's the leverage. Can you imagine what you would have to control $5 million if you didn't have the leverage that we get to take advantage of? Yeah, so imagine that, bro.
I can only wonder.
The thing about the channel is when the market is trading in a sideways channel, it really is telling you that nobody's watching, that market is really quiet. But at some point, it's going to break out of the channel. And that's why I love to trade them so much. Because I know it's going to break out either way. And I can put my orders in place and just wait for the market to come to me. And it's a lot easier than trading the top and bottom. Because you're trying to see if the market's going to change direction like you expecting it to from the formation forming. But in the channel, the market is going to tell you which direction it is breaking out to go to. And you just be there waiting for it to come to you. So, all right. I think we spent some time on this a lot tonight, but we have some more to go over, Barbara. Thank you for showing that chart. What else did you have for us? We'll try to see if we can go through that real quick.
It could wait till next week.
It can wait till next week?
Yes, sir.
Okay, I appreciate that.